Hello guys, hi, this is Ganesh Nayak. We're going to be doing a quick video on all the important concepts that are there for your FRM Level 1 exam. Okay, I'll be walking you through all the 4 books, highlighting which part is important. I'll be marking star also, so please make a note of it so that when you prepare for the exam, when you're doing a final revision, make sure these concepts by default you do it properly. Okay, so let us start with the first book, so which is Foundation of Risk Management. In that, the first chapter, which is Building Block of Risk Management, I'm going to move towards the sections which are important. All this is important. You should be able to understand, remember it broadly. Okay, that is important section. This part, known, unknown, unknown, unknown section is important. This diagram, mark it as star. Okay, then this part, what are the steps you're going to take to take care of the risk? Okay, so that is also important. Mark it as star. Then overall basis, the concept of zero sum game should be clear to you. VAR not that much important from this chapter as such. It is just an introduction. Economic capital, remember this, market as star. Scenario stress testing, this one, this paragraph you should read. Enterprise risk management is okay. Expected unexpected loss, this entire section. And the formula is very, very important. Okay, expected loss formula is going to get tested in your exam. Unexpected loss, the correlation risk concept, market as star, important. Relationship between risk and reward. So over here, this entire paragraph is important. Conflict of interest, these 3 pointers, market as star. Let us go to the next module of this chapter, market risk. This one, equity price risk, you should be clear. Within credit risk, all of these pointers are important. Stat risk is also important. Both funding and market liquidity risk is important. Rest is okay. Business strategy, reputation is okay. Risk factor interaction, this one, market as star. RAROC not very important for the exam perspective, but this one, how do you use RAROC? That implementation is important. Let us go to the next chapter. Which is the how do firm manage financial risk. So overall level, this avoid part is important. Then risk appetite and risk decision. This section is important, market as star. This concept or this diagram is important, market as star. Okay, unicity, layer of correlated risk, time horizon, risk management. When we go to risk mapping, this entire section should reach hedging risk part. Okay, you can actually read this part, this section. Okay, and challenges involved with strategy. MGRM case you should read. This section you should definitely read. Let us move to the next module of this chapter, foreign currency risk, market as star. Static versus dynamic is okay. Impact of risk management tool. Within that, okay, stop loss. So you can read stop loss, then maturity gap, concentration risk. Rest is okay. Rest is not that very critical. We can move to the third chapter. Third chapter is governance of risk management. Okay, few of the implication, this part. this, sorry, the regulation and governance before the crisis, stakeholders, priority, board composition important, compensation important, Basel 1, 2, 3 is okay. All of this is generally not tested. Yes, responsibility and composition of board. Risk identification monitoring is important. FRTB, Dodd-Frank Act. These all 7 pointers are important. All 7. All of 7. Then the concept of agency risk. Clawback provision. MF Global case study. Double star. Important. MF Global case study. Risk management is okay. We are moving towards the next section, the risk advisory director, committee. This section you should remember. Risk appetite versus risk business strategy. You can read this section. This part, the 4-5 points important, and the concept of bonus bond. Interdependencies are okay. Audit committee is okay. We can move to the next chapter. Credit risk transfer mechanism. Okay, so over here, the disadvantage of CDS. CDO is okay, tranche is okay. Again, disadvantage of CDO. Third party insurance, collateral. Then there is syndication, entire concept of syndication. This also, you should be clear what is happening in best effort and firm commitment. Global financial crisis, okay. Okay, not so important. Section 15G, this is important. The process of securitization, if you have read MBS, then this is almost a repeat. Disadvantage of OTT model. We're done with this chapter. We are moving towards the next. Modern portfolio theory and the capital asset pricing model. All the assumptions over here are important. Rest is okay. What is the basic concept of efficient frontier? You should be clear. With respect to capital market line, the last 3-4 lines over here, the formula is important. Capital asset all CAPM important. All the assumptions are important. Do not skip this. Beta formula is okay. This is also okay. Regression line. There's no need for you to remember the derivation of the CAPM. Okay, you should only remember the basic formula and you can read this part. Okay. Expected return is okay. This entire section is very, very important. They can ask you theoretical question with calculation of CAPM on this section. Then you have sharp trainer. So sharp and trainer are very, very important. Highly likely that they might test you directly on this. So both the formulas is something which you should remember. Then you have sharp ratio trainer. Okay. What is the basic concept of tracking error? You should be clear. Sortino ratio is okay. Yeah. So we are done with this chapter. We are going to be moving towards arbitrage pricing theory. Okay. An APT theory starting part is okay. What does arbitrage means? These assumptions are important. Multi-factor model, basically Over here they're explaining what does there in the model, in this model, so you can just read it out. Applying the factor model, more or less easy, very basic discussion. You can read the conclusions of APT and you can mark this as star. Hedging factor approach is okay. You can read this. Pharma French is important. Pharma French, the formula is important. Okay, and this paragraph you should definitely remember what is happening in this paragraph and how they are calculating the Pharma French number. Let us move to the next chapter, the 7th chapter. What is that? Principle for effective data aggregation and risk reporting. Full of principles. Okay, so few topics are important. These pointers are important, the initial pointers. Why do we need to look at data? Then model risk, input risk. Okay. First principle. Second principle, you can read these two sections. Physical data model. Accuracy and integrity is important. So these last 3-4 pointers. Completeness, important. Timeliness, you can read this section. And this also. Adaptability, this point. And this point is also important. Accuracy, comprehensiveness, this section, these three, mark it as star. Frequency is okay. Frequency, yes, this part, mark it as star. Distribution, this part you can read. So we're done with this chapter also. We're going to be moving towards the 8th chapter, enterprise risk management and future trend. Okay, you can look at this basic difference between what was traditionally happening and what is now happening with ERM. So that all of these pointers has to be clear. Okay, this point, capital cost, this one also. ERM best practices, this paragraph. ERM dimension, the structure, important. ERM strategy and culture. Risk culture characteristics and challenge. Tone of the top is important. Whistleblowing and escalation. Risk management stature. Last point. This one is very important. Curse of data and the cultural cycle. Sensitivity scenario analysis is okay. Within this, actually, this point disadvantage. Crisis, US testing, DFAST, you can read this properly. These pointers are important. Mark this as star. Cocoa bond. This section, reverse stress testing. And we are almost done with this chapter. Let us move towards the next chapter. Learning from financial disaster. The entire chapter is important. Actually, there are a lot of case studies into this. I'll still highlight which I feel is slightly higher important. or which section is slightly higher important. So lessons from the SNL crisis, important. In the past, they have tested continental Illinois. Okay, so entire case study is important. Northern Rock, they have not tested. You can definitely read the lessons. Okay, lessons within the hedging strategy. This entire thing is okay. MGRM double star, very favorite of the institute. They have been testing this entire case study. You should be clear. Full case study. Yeah, my marking everything. Nader case is okay. Capital asset pricing model LTCM is very important. Everything in this case study, whatever is written in the book, you should be clear. All of this specific lesson and all. London Wales pairing banks, again double star, very important. The full case study. Bankers Trust is okay. Orange County is okay. Volkswagen, important, have been tested in the exam. You can read these sections of Enron. Cyber risk, Swift. Swift case is also very important. Have been tested in the exam in the past. So overall, the entire chapter is important, so do not skip it. Let us move forward towards the next chapter, which is the anatomy of the great financial crisis. Okay, asset liability mismatch. This section. This one. The basics of repo. You can read this. Central bank intervention, you can read these things. Very small chapter, very easy also. Let us go to the next chapter, which is your CARP code of conduct. Now over here in this chapter, you have to solve a lot of questions. Okay, because a lot of these content is subjective. When you read, it is more or less simple English that they have written. But I'll also highlight what is important over here. Misrepresent data should not be there. Dishonesty, mindful of the culture, full and fair disclosure, confidentiality, both the points are important. 4.3. 5.5, 5.4, sorry, 5.3. Any violation, this section is also important. So we are moving towards the next book. So if completed the first book, we are moving towards fundamentals of probability from your book 2. Okay. Let us look at the basic structure. So conditional, unconditional probability, you should be clear what exactly it is. And you have this section you should be clear on. Conditional independent event is not very important. Unconditional, conditional is okay. Bayes theorem, high chances that they will ask you 2 questions on this. Okay, mark this question also a star. So this is where we complete the first chapter. Let us move to the second chapter, the random variable. Okay, in random variable, continuous random variable is okay. Expectation part. The basic calculation of expectation should be clear to you. This section should know. These properties of expected value should be clear to you. Central movement, variance. The formula should be known. Nobody is going to ask you to do the calculation. Okay, skewness and kurtosis. Also, what does kurtosis means? This is important. What does skewness means? Okay, that is also important. So these diagrams of skewness important. This diagram of cutoffs is double star, very, very important. Probability density function is okay. Quantile is being tested in the last few exams. And the interquantile range, mark it as star. Linear transformation over here is not that important. Let us move forward. Common univariate random variable. Okay. Uniform, continuous uniform is okay. You can remember this formula and this formula. Bernoulli, this section you can read. For binomial, the formula is very, very important. They can ask you very specific exams questions. So mark this as star also the question. And these two formulas should be remembering. Poisson, the formula is important. Mark it as star. The questions that you see, whatever different types of questions that you can see, mark it as star. Normal distribution, all of these key properties are very, very important. Calculation of confidence interval and the basic formula of confidence interval important. You can mark this question also star. Now this Z value highly testable in your exam, standard normal distribution. And how do you calculate the probability? So this entire thing, the use of standard normal distribution table, that is very, very important. Log normal, this section, what is the difference between the normal and a log normal distribution? Students chi-square, this section is important. You can also read this entire part. This is connected to your hypothesis testing chapter. This diagram, where it highlights as the degree of freedom increases, your distribution becomes more normal. More or less, this is not very much important. You can read this section. Read this section. Mixed distribution, this example. Let us go to the next question over here, next chapter. Multivariate random variable. Probability matrices. Again, if you have seen my video, this section is not that difficult. If you remember, if you understand the basic concepts of fundamental probability, this chapter is very easy. Okay, only thing is they have shown you so much difficult notation. So you can read this part, mark this question as star. Marginal probability of data is easy, simple. Conditional distribution, this is important. The way they are calculating these answers, that is what you should know. Expectation of bivariate, mark this question as star. Easy, very easy question actually. Covariance is okay. Correlation formula, you can read this. Linear transformation is okay. So this formula is important. This formula is important. Mark this question as also star. This diagram, you can have a look at it, and the explanation is actually given over here. Conditional expectation is okay. Within IID, you can remember these pointers. Let us move forward towards the next chapter. Sample movement. So sample movement, the initial part of the chapter is not very tough as such. This paragraph you can read. Point estimate, the entire section. This entire section. This part important. Estimating movement of large number. Okay. You can look at law of large number and mark it as star. these important points. Double star important from the exam perspective. Double star. Skewness, nobody's going to ask you the basic formula. Okay, but you should remember these pointers, which is connected to these diagrams also. Kurtosis, this paragraph. And what is leptokurtic? What is platykurtic? This diagram. And the last two lines over here. Estimating quantiles is okay. Median is okay. Mean of two correlation covariance. The basic formula of covariance should be clear to you. Correlation important. Score skewness is okay. So these 2-3 paragraph is important for you to remember. This diagram and this diagram. So with this, we have completed the chapter sample moment. We are going to be moving towards hypothesis testing now. So the steps of hypothesis testing is okay. Null hypothesis should read. Choice of alternate, this entire section with the formula, the standard error formula. One tail, two tail, this section. The sum, you should know how to calculate, how to do hypothesis testing. Okay. More or less a basic thing. Type 1, type 2 error, entire thing important. Do not skip this. Okay, then there is also p-value, which you should not skip. Statistical, this in one paragraph is important over here. P-value double star. Entire thing along with the diagram important. Do not skip. Confidence interval is okay. T-test. T-test, you can remember this. Set value is okay. The table over here is important. Mark this a star. This one, you can look at this question also, when to use Z and T when the sample size is very big. You can mark this question as also star. How do they do hypothesis testing? That is okay. Rest is not that good. Okay, so it's very, very basic. Let us go to the next chapter, which is linear regression. Yeah, linear regression. The initial part is okay. These conditions has to be clearly available. 1 second. So I'm repeating these conditions, you should remember. Then ordinary least square. These formulas should be clear to you. How do you calculate slope? How do you calculate intercept? Should be clear to you. The basic relationship between R square and the correlation. Survivorship bias, mark this as star. Omitted variable bias, mark this as star. Variance of the error is constant, mark this as star. Properties of OLS, unbiased estimator, star. Consistent estimator, star. This entire section, double star. Double star. Next is hypothesis testing. P-value, again important. Let us move to the next chapter, which is your multiple regression. Regression with more than one independent variable. All the assumptions are important. In theory, they can test you. And this is the additional one. So this is also important. Rest is okay till this point. This relationship is important. This diagram is important. The formula for R square is important. the relationship. This section is important. Joint hypothesis testing. And just mark this question a star. F test is okay. Now there are two formulas for F test. Okay, the second one is most likely being tested in the exam. This and this example. Let us go towards the next part, regression diagnostic. Okay, at an overall level, this chapter is important, so do not skip this chapter. Okay, so this conditional and conditional heteroscedasticity, what exactly is heteroscedasticity, how it is different from homoscedasticity, you should be clear. Okay, this diagram, the effect, very important. Correcting heteroscedasticity important. What is multicollinearity? What effect it is going to bring in? How do you detect? That is also very, very important, especially the example that they have given you. Mark this as star also. Should be clear on the concept. VIF factor double star have been tested in the exam. If VIF is greater than 10, then there's problem. So that is very important. Model specification, omitted variable bias, this entire thing. Bias variant trade-off, double star, very, very important. This entire section, important. Crystal plot is okay. Identifying outlier. Cook's measure has been tested in the exam. Generally, they will not ask you the calculation, but they will give you some information with respect to, you will be able to identify that the D calculated value of D is greater than 1. So what decision you are going to take? Let us move forward towards stationary time series. So this entire thing of covariance stationarity, important, very, very important. Autocorrelation, this part. White noise, you can read this. The basic idea of white noise should be clear to you. Rest is okay. AR. So auto-regressive approach, very, very important, mark it as star. This entire thing, mark it as star. This paragraph, important. Yule-Walker rule, important. This section is also important. For moving average, you should remember the autocorrelation cutoff. The lag operator is not that important. Then you have ARMA. The basic formula of the ARMA should be clear to you. This section is important. Sample is okay. Testing autocorrelation. You can remember all of this. Not formula is generally not tested, so don't worry about it. Okay. Seasonality is okay, not so very big. Non-stationary time series, the next chapter. Now in the next time series, trend, stochastic, linear, these pointers important. What happens in log linear model? This section. Seasonality, this entire part. Mark this as star. Rest is okay, not very, very important. Unit root is also okay. You can read this section of Dickey-Fuller test. The last paragraph is important. Mark this as star, especially less than 0 section. Less than 0 section, very, very important. Let us go to the next part, which is measuring return volatility and correlation. First part is okay. You can read this section. The way they are calculating the volatility, that is important. JB test, mark this as double star, very, very important. They will not ask you this calculation, but they will ask you the analysis. Okay, so but JB test has been asked in the exam also. So marking this question is also star. Power law has also been asked with respect to this formula or the parameters in the formula. Correlation and dependency, Pearson correlation is okay. Spearman rank correlation. So out of all of that, Spearman rank correlation, chances of that being asked in the exam is very high. So this section, then this part important, and also the sum. Candle star is generally not tested in the exam. Rest is all good. We can move to the next chapter, which is simulation. Simulation and bootstrapping. Within simulation, first they are explaining what exactly is simulation. Reducing Monte Carlo's sampling error, very, very important. Entire section is double star. Everything is important over here. Nth edit is okay. Control variate is okay. You can read this part, this example. Bootstrapping method, we have the IID method, import marked as a star. Circular block is okay. When you cannot use bootstrapping, that section is important. Random number generation, this part. Disadvantage also you should read. So with this, we have completed the simulation chapter. We are going to move towards machine learning methods. Okay, machine learning is classic. This one you can read. Mark this section as star. Supervised, unsupervised, and reinforced, mark as star. Standardization is important, and normalization is also important. PCA, this one. Can mark this as star. This diagram important. This section is also important. Overfitting, underfitting. The concept should be clear to you. This is the same bias variance trade-off that we saw in regression. This entire section. Reinforcement learning, all the three areas. This section formula. NLP, all of these pointers. All of them. We're going to be moving towards the last chapter of this book. Machine learning and prediction. One hot encoding is important. Regularization. So this first one, rigid regulation, mark it as star. There's no need for you to worry about the formulas. You can read this section. Decision tree. Information gain. This last section. This paragraph is important. Bootstrapping and or bagging. Boosting. Mark this as star. K nearest important. Neural network is okay. This entire last part is double star because they can ask you calculation based question over here. This entire thing, okay, how it is connecting it to the confusion matrix, mark this as star also. How they are doing the calculation, that all of these formulas has to be very, very clearly available. This entire section is also important. India area under coverage. Rest is almost, we are done with the book 2. Okay. Hello friends, let us start with the third book for your FRM level 1, and we're going to be talking about the important concepts for the book. So in the first chapter is banks. Over here, the majority of the risk that is faced by the banks, you can definitely make sure that you're comfortable with it, and especially with the credit risk aspect. Economic capital versus regulatory capital. So you can read these 2 to 3 paragraphs. You can definitely go through that. Basel committee requirement, you should have this last 3-4 lines broadly understood what is 72.5% talking about. Then you have insurance, deposit insurance, and moral hazard. So this concept is important from the exam perspective. Theoretically, they can test you by giving you a scenario and all of that. So definitely make sure that you have to make sure that you go for the important concepts. Over here, investment banking financing arrangement. Now over here, mostly they will test you with some number with Dutch auction process, very good chance. Potential conflict of interest, broadly you should know this part and this part. So I'm just marking this as star. Banking book versus the trading book. Over here it's more or less generic. OTD model is covered in the other chapter, so not very important. Let us move towards the second chapter, which is nothing but the insurance companies and the pension fund. Now over here the chapter starts with the basics of insurance, different types of insurance, so it is okay if you just read through it. Okay, the concept which is explained over here and in this diagram, the concept should be clear what they are trying to highlight. Okay, next, annuity is okay, property casualty insurance, health insurance. The major risk faced by insurance company can be tested easily. Okay, and especially the credit risk, you should be clear what is happening over here. Mortality table. Okay, so overall, they might not test you on these basic calculation, but what they would do is they would ask you break-even premium. Okay, now in the past exams they have been testing this, so make sure that you're comfortable with the calculation, even though they might not give you a very big sum over here like this, but they might give you a part of it, and you will be asked to calculate some portion of it. PNC ratio, this is again double star, has been tested in the past exam, so make sure that you're good with this concept. Moral hazard, adverse selection is broadly okay. This one, mortality risk, what is mortality risk and what is longevity risk? The concept should be clear for the exam. Capital requirement, yes, you should be clear on these 3 terms. Guaranteed system is okay. Pension fund, pension plan, most likely it's going to be the defined contribution plan if they test you in the exam. With this, let us move toward the next section where the focus is on the fund management, where they were talking about mutual fund, hedge fund and all of that. So the first few sections are very basic, so not so important. Net asset value is okay. You can read this section clearly, the front and back end load. This one also, the last paragraph over here, you should be clear. ETFs, undesired trading behavior, double star, very important. Historically they have been testing this section, especially the late trading and the market timing part, so be very clear what is happening over there. Net asset value is okay, calculation they will not test you. Hedge fund basic information is okay, you should be clear what is happening over here with respect to lockup. Incentive fees, what is incentive fees, what is 2 plus 20%? Okay, that is important. Then there is a watermark clause, that is also important. They might give you, if they want to make the exam slightly tough, they will give you some small sum related to it. Okay, high watermark clause. Clawback provision is okay. The calculation is not generally tested. Hedge fund strategy, long, short equity, definitely. Okay, distressed debt, very important. Merger arbitrage has been tested in the past exam. Convertible, emerging, global macros is okay. Read global macros. Hedge fund performance. So this concept, these 2 concepts, measurement bias and the backfill bias, both of them should be clear in your mind. We'll be moving towards the third chapter now. Introduction to derivative. Generally, over here the concepts of call put option has to be clear in the mind of the student. So the exam might not test you directly on what is call, what is put, what is long call. Okay, so they're very unlikely that they might test you very basic stuff. Okay, you can read this paragraph. The advantage, disadvantage of the OTC, broadly easy concepts. American, European, future not very good. So basic formulas, you should be clear. What is call, what is put, what is a payoff, the diagram. That is what you should know, you should remember. Okay, and not only for the exam but also for the interviews that you're going to expect in the future. So these diagrams and the payoff structure, the formulas and all. Then basic questions there. Forward contract, again this formula is important, diagram is important. Hedger, speculator, so you can read both of them for the exam. Okay, hedging with forwards, option. You can read the first two paragraphs. Okay, we can move toward, okay, you can also read this part, huh? The risk of using derivative contracts. Let us move towards the next section. Exchange and OTC market. Now over here, the exchange and OTC market explicitly talks about, okay, the central clearing and how exchange is different than the OTC. So over here, the first section, the clearing, what is initial margin, variation margin, that should be conceptually clear in your mind. Netting is okay. Margining is okay. This one, this entire paragraph important, especially the default fund contribution. What exactly is that? Should be clear. Can move forward. Very basic part. You can read this table. Mitigating risk. In this, that's short sale and the buying on margin. Both of them are important for the exam perspective. Okay. Collateralization is okay. SPV is okay. You can read this actually. The special purpose vehicle part. It is again going to get covered in your mortgage and mortgage-backed security check. Let us move towards the next part. Central clearing. Okay, central clearing chapter, again connected to exchange and OTC market. What exactly is clearing? What exactly is settlement? You should be clear. Auctions and default. Loss mutualization concept is important. Market is star. Yes, all the advantages, double star, very important. They have been tested in the past exam. Okay, especially this loss mutualization and default management. Even disadvantage, mark this as very star. So this moral hazard and pro-cyclicity has been tested in the past exam. Regulatory initiative is okay. You can read these three paragraphs, three points. Margining is okay. This paragraph you can read. Innovation and netting. Fairly basic. The risk faced by central counterparties. Over here, the default, actually this default risk is very important. Mark this as star. And over here, the VMGH, the variation margin gain haircutting, is important. That can get tested in theoretical aspect. Liquidity risk is okay. You can read this, investment risk. And we can move to the next chapter now. Futures market. Okay, the next chapter from your book 3. Okay, slightly important. The important concepts is this: open interest and trading volume. Then what are the key features of the futures contract? What is basis? The basic concept of basis should be clear. This sum has been tested. Margin calculation sum, very important. Do not skip this entire sum. Then you can move towards the quote is okay. Delivery process, this entire thing important. Mark this as star. In the types of order, generally they will ask you in limit or stop loss. Stop loss, both of them I am marking it as star. Mark to market hedging, and all of this is very basic, so I'm not covering it as an important aspect. The next part that we are looking at is using futures for hedging. You can mark this entire chapter as important. Okay, the reason being, I'll just directly go to the important side. The reason being, so over here they are explaining you what why hedging does, when hedging does not work. Okay, so that is also highlighted. The entire concept of basis risk is important. Okay, so all of these 2 points, okay, these 2 points important, so don't skip it. Optimal hedge ratio, again this entire chapter, if you should not skip. Okay, the optimal hedge ratio has been tested, the simple basic formula has been tested in the exam. Okay, if they ask you theory, they will basically ask you interpretation. Okay, effectiveness is okay, not very important. The sum, you can mark this as sum as star. We can quickly go to the next chapter, hedging with the equity part, hedging with the stock index future. This and the sum important. Trailing the hedge is not generally tested. Adjusting the portfolio beta has been asked in the past exam also. So mark this as star and this formula. Any calculation from this can get tested in the exam, in this chapter. Rolling the edge is okay. We can move towards the next chapter. Foreign exchange market. Okay, so over here, what is happening? You should be clear on what is, how the forward quotes are identified. Then the basic of translation risk and how to hedge the translation risk. Transaction risk. Then we had translation risk and how you should hedge. That has also been highlighted. Multi-currency hedging is okay. Exchange rate drivers is okay. You can currency appreciation, mark this as star. It has been tested in the past exam. The overall concept. PPP is okay. Nominal real interest rate. We can talk about expected inflation. This formula. Interest rate parity. Within interest rate parity, yes, this formula is very, very important, and you should be clear on these two paragraphs also. Then we can move towards the next chapter. So pricing financial forwards and futures. So very, very basic. Short selling is okay, not very important. Yes, the valuation of forward. Okay, this equation, how does it leads to arbitrage position, that is there. This calculation with income or yield, both of them, the formulas has to be clear how to calculate, and you should be, ideally you should be solving few sums also. If there is a known dividend in terms of yield, then how it is going to change, this is important. Valuation of forward contract, generally they don't test you. Forward prices, future price, yes, this entire section is also important, the understanding wise. Okay, this first paragraph, exchange rate, it's the same one. Interest rate parity, the same from the previous chapter of FX, so not so important. We can move ahead and we can move to the next chapter. So the next chapter is commodity forwards and future. We talked about investment asset, now we're going to be talking about commodity asset. So the way the commodity is different, that has been highlighted over here, important. Agricultural commodity and energy, important. This has been tested in the past exam. Forward pricing is okay. Cash and carry arbitrage should be clear to you. How we are doing it, when it is triggered, that should be clear. So I'm marking this understanding also as star. Reverse cash and carry, and then lease rate. Okay, so the constant formula for lease rate has to be clearly available, and then mark this sum as star. Storage cost and convenience. What exactly is the convenience yield? What else exactly is the convenience yield? That has to be clearly identified. This formula. Expected spot price, yes. The last section, what is normal contango, what is normal backwardation, you should be clear. I'm moving towards the next chapter now, which is option markets. Very basic, the same way we had the futures market. So over here also talking about option market. The first 3-4 pages are very basic and simple. what is option, of call, put, and all. Again, a repeat of what we have seen in introduction to derivative. So we can directly move towards the main section where the chapter starts. This is okay. Expiration is okay. So you can read the strike price reference. Next option. Yes, effect of dividend and split. Very, very important. Tested in the exam. Entire concept should be clear. Trading is okay. Position limit conversion is okay. Read margin requirement. OCC, exchanging an option. You can read about warrant. Let us move towards the next chapter. Properties of option. Okay, now over here, all the 6 properties are very, very important, highly testable, and at an overall level, this chapter is important. So don't skip this chapter for your exam. Properties of options are okay. Upper bound, lower bound is okay. This computation of put call, what exactly is put call parity? How do we create? What is the formula? Okay, so all of this is important. The formula, they get tested in the exam. Okay, especially these sums, very basic sums. Mark this as star. Then this is okay. Ideally, you should be reading this section. If you're my student, I've also highlighted what is the shortcut to come to this table. Okay. Then this is okay. Relationship, impact of dividend is also okay. Let us move towards the next chapter, which is the trading strategy. Okay, this chapter is also slightly important as compared to the other chapters. So over here, they might ask you on principal protected node. This has been tested in the past exam also. Option spread strategy, bull and bear strategy, very, very important. Don't miss this. Butterfly strategy, triple star. Very high likely that they will ask you this question. Very simple calculation, similar to what you see in the book. Okay, this kind of calculation will come in your exam. Calendar is okay. Right is okay. Box period is okay. Straddle, double star. Important, the way you have butterfly spread over here in the combination strategy, you have straddle. Mark this as star. Strangle is okay. Strip and strap is okay. We can move towards the next chapter, exotic option. Now over here in the exotic option, you will find these three. These three are important. Bermuda option and all of this important, so don't miss it. Gap option, this has been tested in the exam. We should be very clear how this why this diagram is coming like this, why is it going into negative. So that understanding has to be clear. The entire thing, gap call, gap put, everything. Forward start option is okay. Compound option, star. Okay. User option is okay. Barrier option, double star. Very, very high likely that they will test you on this concept, on this question. This entire thing is important. No? Binary also, we can mark it as star, important, especially these diagrams. The acetona thing, like all and all of it. Look back is okay. Asian option is also important. Volatility swap, static option replication. Fairly simple concept. So let us go towards the next section. Properties of interest rate, credit to bond valuation. Okay, so types of first part, types of interest rate is okay. You can just read this section, the OIS in the last paragraph. Compounding frequency, generally they will not ask you this question. Spot rate, forward rate is okay. The basic bond yield calculation should be clear. This paragraph also. Bootstrapping also, generally they don't test you in the exam. Even though the calculation is very big, they generally don't test. So I'm just directly moving to forward rate. This can get tested, the calculation of basic forward rate for the exam. So do not miss this. And these two formulas, very, very important. This is star. Forward rate agreement can also get tested. Mark this as double star, important. So you should be clear on what is the cash flow formula, what is the valuation formula. Okay. And you can mark this question as star and this question as also star. Liquidity preference theory, mark again this as star. Duration, convexity, duration, and this entire paragraph. This calculation you should be clear, and then you have to calculate this. This is also important. Okay, I hope everybody is participating into this and they're marking as I move ahead. Let us go to the next, which is corporate bond. Okay, now over here very specific things can get tested. So mark this section as star. The second paragraph, classification, entire zero coupon bond is important, do not skip it. Collateral trust bond, equipment trust certificate, double star. This has been tested in the past exam. Methods of retiring bond, call provision and sinking fund. Both of them are highly testable in the exam. Sinking fund provision also. Rate risk is okay. Basic, you should read this paragraph. Event risk, high yield bond is okay. You can read this last section, the last paragraph. You can read this part. Mark this entire section as expected return as star. Don't worry about it. Read this entire section properly. So we are moving towards the next section now. Mortgages and mortgage-backed security. I'll be highlighting the important concepts also. It's very basic, not so important. Both the formulas important. Weighted average maturity, weighted average coupon. Measuring prepayment house. Measuring prepayment, double star. Okay, all the formulas should be clear to you. Especially this similar kind of sum will come in your exam. So do not skip this important concept. Dollar roll transaction, double star. It has been tested in the past exams. Okay, especially this concept of A, B, C, D, and that is what they were going to test you. Okay, planned amortization is important. You should not forget about that. You can read principal only strip. In terms of modeling, okay, what I feel you should remember is the incentive function, this entire thing, and this diagram also, and this paragraph also. Do not skip this. Then the valuation, generally they don't test it. Basically, they might ask you on theoretical aspect of it. So you can read this part. Read step 3. Option adjusted spread, again important. It has been tested in the exam also in the past. Okay, so there is a formula of the calculation, which is, I think so, over here, that has been tested. We are moving towards the next chapter. I think so. Next chapter is interest rate futures. Yes. Mark this entire chapter as star, double star, important. Day count convention, again important. How do we calculate accrued interest? All of this is, you have to be remembered in the exam. This example, again marking it as star. Quotation for T bond is also important. This is star, cash price, green price, value price. Very, very important. Quotation for T bond is T bill is also important. This formula, how you are going to be, you don't need to remember the formula. You can use the logic and get the answer also. Treasury bond futures is okay. There is the cheapest to deliver concept. This is a very, very important. double star, very important. The same sum will come. Okay, same sum will mark this as star. 231 futures, okay. Euro dollar. Okay, so there are two major difference between the euro dollar and the your FRA that has also been highlighted. Second, yeah, convexity adjustment. This formula can get tested in your exam. Okay, so you can mark this as star. Duration based hedging also, this can get tested, mark this as star. Important. And I think so this is where we have completed the book 3. Hello friends, I'll be walking you again to the book 4 of this FRM level 1 curriculum. Important concepts over here. The first chapter, measure of financial risk. In this case, we're going to be moving towards the first part. So both these formulas are important. Mark this as star. The overall concept of efficient frontier is important. So you can read the last 3 line over here. And you can read this section also. Mark this as star. Efficient frontier. Again, the last 3-4 lines over here are important. The mean variance framework limitation. So you can read these pointers also. The formulas and the rest of this is okay. Value at risk. This formula, delta normal var, important. Mark this question as star. It is getting tested in the exam, so do not skip it. Major limitation में the 2 arbitrary parameters, what confidence interval, confidence level and holding period, you can just read. This is important. Mark this as star. Then there is this concept of sub-additivity that is also important. Then you move to coherent risk measure, all of them double star. Very, very important. They do get tested in the exam, so do not skip this. Okay, in terms of expected shortfall, you should be broadly aware about what is the basic concept of expected shortfall. The formula is generally not tested, so don't worry about it. Then this entire thing, and there is a summarization also at the end. So mark this as double star. This is so first chapter is fairly important. Don't underestimate the first chapter. Let us go further towards the second chapter, which is calculating and applying VAR. So linear derivative. This is okay. This paragraph you can read. Mark this diagram. You should be clear on what is happening in the diagram. And there is one, this sum. This is a double star. Similar kind of sum has been asked with respect to linear derivative. Mark this as star. The basic calculation of VAR and expected shortfall from this example, important. Delta normal VAR. This is okay. Linear interpolation is okay. Gamma. So you can look at this section also. The basic concepts of how gamma, delta normal, delta hedge and gamma hedge is going to work. Then you can actually move towards Monte Carlo. This section, square root formula, important. Advantage of Monte Carlo and disadvantage of Monte Carlo, important. You can read this section, important. Worst case scenario is also okay. Let us move forward towards the third chapter of this book, measuring and monitoring volatility. So this is a repeat. Fact-tailed distribution is okay, left skewed. So you can read this section. You can read regime switching, parametric approach is okay. Historical simulation, double star. This has been tested in the exam. Parametric, non-parametric assumption. Mark this as star. Estimating volatility. EWMA, very, very important section, double star. EWMA model. And the Garch model. Mark this as double star. Garch model has also been tested in the exam. So generally they will ask you this formula. Okay, there is this, you can read this section also, important. They will ask you similar kind of example with numbers and you have to remember the formula. Alternative weighing method is okay. Mean reversion and long time horizon. Implied volatility is okay. Updating correlation not generally asked because it's very long. Let us move to the next chapter. External internal rating. Basics of investment grade, non-investment grade should be clear. They might test you on this calculation, huh? Conditional and also might test you. So marking this as star. Cumulative hazard rate, double star. Important for the exam perspective. Recovery rate is okay. Credit spread. This you should be reading. Through the cycle and all is more or less okay. Read this paragraph, this part. And this sum on rating transition metric is very, very important. This has been tested in a lot of past exams. Anticipating rating change is okay. More or less okay. So we can just move to the next section. Next chapter, where we are entering into country risk determinants, measure and implications. So economic growth, political double star. They will give you some case study and they will ask you to do an assessment, especially the continuous and discontinuous policy part. Legal risk is okay. Economic structure is okay. Evaluating country risk. This section, read properly. Foreign currency debt, local currency debt. This section can get tested in the exam. Consequences is okay. Factor is okay. Sovereign default spread, definitely be clear on what is happening right here. We can move to the next chapter now. Measuring credit risk, slightly important. Okay, so the basic concepts of economic risk and regulatory risk is to be aware. The basic of expected shortfall, what are the parameters that are used in the expected shortfall, that should be clear to you guys. And the formula, okay, expected shortfall, sorry, expected loss. The formula for expected loss, mark this as star. In the exam, they can ask you very simple, straightforward expected loss calculation. And you can read this part also, mark this as star. The next part is okay. This part can get tested in the exam, okay, in the form of the sum. So make sure that you're comfortable with it. Gaussian's cupola, the basic idea should be clear. Why are we doing cupola function and how do we do percentile to percentile mapping? That is what they generally ask. They might not ask you very, very specific formula driven part in this section, so don't worry about it. Weizsäck model, double star, very, very important. It has been tested in the past exam, okay, and especially this formula has been tested, so you should not skip this. Double star. Credit metrics, Euler's theorem, don't worry, it might seem very complicated, they generally don't test you. Then you have challenges. Yes, the challenges part, all of them are important for you to understand, especially the wrong way risk. Okay, so with this we are moving towards the next chapter. Operational risk. Within operational risk, all of these Basel committee requirements, the categories has to be is important. Cyber risk, compliance risk, rogue trading, read. Basic indicator important, the formula, the logic is important. Now standardized section, they will not expect you to remember all of this, so don't worry about this section. AMA is okay, so you should remember this part, this diagram. What does it highlight? Standardized measurement approach, generally they don't test you. LDA, for frequency you use Poisson, so that, and severity, and this is what you should broadly remember. The formula is not tested in the exam. Simulation, data limitation is okay. Potential biasness, you can read, mark this as star. This has been tested, so mark this as double star. Say example, double star. Applying scenario analysis is okay. Forward looking approach, KRI. Power law also. You can mark this as star and read this formula. Okay, so I hope that at least in this chapter, the insurance moral hazard is almost a repeat of what we have seen. But you can read this last paragraph. Let us move forward towards the next section. I hope everybody is making pointers and notes for important topic. Stress testing, very basic. Stressed VAR and stressed expected shortfall. Ad hoc stress testing is okay. But this one, this entire paragraph, okay, important. Core variables and peripheral variables. Reverse stress testing is okay. You should remember Dodd-Frank. You should remember CCAR. Stress testing governance. You can read this two paragraph. You can mark role of internal audit as important. This entire section. Policies and procedure, validation. So this is where we complete this chapter. We're going to be moving towards the next one. Okay, which is your pricing convention. This is where we start the bond valuation series. The first part is very basic calculation of bond, not very, very important. The bond price yield curve is important. Discount factor calculation. This is nothing but the quotation of table which we saw in book 3. Almost the same. You can read this section also. Discount factor is important. It has been tested in one of the previous exams. This arbitrage point, don't worry about it. It's very big calculation, generally not tested in the exam. Bond component and pricing is okay. Constructing replicating portfolio, very, very unlikely that they might test you in the exam. Don't worry. This clean price, dirty price is very, very important concept. Okay, so that you should be clear on, and it is repeat from the interest rate futures chapter. If you have done it over there, this section is almost done. We can move towards the next chapter, interest rate chapter. Yes, the first part is very basic, compounding frequency, not high chances that they will test you. Spot rate and all of that. Okay, this entire section. How do you calculate discount factor is important. Calculation of forward rate is important. Par rate important. So I'll highlight the important section also over here. You should know how do you calculate par rate. There's one more formula which is this. This is star. Relationship between the spot, forward and par double star. The table should be clear in your mind. Swap and swap rate is okay. Now yield curve shapes, in that non-parallel shift, the yield curve twist important. Okay, and in this the entire part of flattening, steepening, both. Okay, all of this is important. Mark this question as star. Let us move towards the next chapter. Bond yield and return calculation. Okay, this you should remember, reinvestment concept. Bond spread is okay. YTM is very basic, so you can look at this sum. Perpetuity, very, very important. The entire formula is important. Coupon effect, double star. Coupon effect is tested in the exam. Japanese yield, double star, tested in the past exam. Do not miss it. The entire formula you should remember. Bond return decomposition. So you can actually look at point till this point and this extension also. Rest is generally not tested in the exam. You can still read it, but not very unlikely. Let us go to the next question, applying DV01. This entire chapter is important, so mark this as star, double star. Okay. DV01, entire thing important. The sum of DV01, very highly likely that they will test you in the exam. The hedge ratio using the DV01 important. The sum important. Computing duration is okay. Callable puttable bond important. The basic concept should be clear. They will not ask you calculation over here. The relationship between DV01 is important. What does convexity tells you, where duration fails and convexity comes into picture. This is highly testable question. Okay, if you have a duration convexity, we want to understand what is the change in the price or the change in the yield. Portfolio duration. This also has been tested in the exam. Very simple calculation has also been tested. Judging example not heavily tested as of now. But there is a concept of barbell and bullet. This double star, highly testable concept in the exam. Let us move to the next chapter, modeling non-parallel shift. If you're finding this chapter slightly tough, do not worry. You just have to focus on a few important aspects. Principal component analysis, very unlikely that they will test you. Okay, so this forward bucket partial 01. What exactly is key rate shift? Then the full concept of key rate 01 should be clear, and the concept of key rate duration and the formulas. Both the formulas are important. This is okay. Not likely testable. Forward bucket. Rest, I don't think so is much testable in the exam. Okay. Yes, you can read this section and this formula. And this formula also. So let us go to the next chapter. Pionometry. So we are looking at last 3 chapters of this book. Pionometry is okay till this point. Risk neutral. These all formulas are important. So they can ask you very basic question on one step or 2-step pionometry. You can mark this question as star. Hedge ratio and all, okay. You can mark this section as also star. It should be clear what is happening over here. This is 2-step pionometry, and then you also have modification. So modification, this part can get tested, and this also. American option, how things are going to change. Mark this question as also star. We can move towards the next chapter, Black-Scholes model. Black-Scholes, this has been tested, but very, I would not say that's just don't focus on the formula as a concept. They might give you the formula and they will ask you to calculate. Rest is okay. This expected value calculation, mark it as star. We can move to the Black-Scholes model. All the assumptions has to be clear. Important assumptions are important. This formula, and especially the formula of D1, important. The rest is okay. A slight repeat. Almost these are just sums of Black-Scholes model. So you can just use it. You can also look at this section. This section is important, American dividend. So you should look at all of these till this point. Valuation of warrant. This example is important. Has been tested in the past exam also. Mark this as star. Volatility estimation is okay. We can move towards the next chapter and the last chapter, which is the option Greek. Stop loss strategy is okay. The concept of delta. This diagram, this entire diagram important. what does delta neutral means and how do we calculate the delta. Okay, delta is nothing but ND1, so mark this as star and also check this question as star. Forward delta is okay, future delta is also okay, dynamic aspect. So this delta neutral portfolio creation is important. You can look at this example. The rest also delta neutral hedge is important. Theta, there is the concept of theta. This entire section you should be clear with two formulas. This entire part important. Gamma formula is not tested, so it's okay, but gamma diagram is important. This entire discussion is important. And over here they talks about gamma neutral, that is also important. Mark this question is star. Rest is okay. Vega formula, don't worry about Vega and rho formula and all. Focus only on the diagram. This paragraph. Rho also don't worry about the formula. Greek letters of the portfolio hedging activity. Okay, not so important. Portfolio insurance. You can read this part. And then we are done with this chapter. So I hope everybody is able to note down the important concepts and focus when you're doing the final revision. Focus on these things and it will give you a result in the exam. Thank you very much for joining.